Hello, everyone. My name's Andy. I'm from the Finding Value Finance channel. Today, we've got Justin Hune with us from uraniuminsider.com. And we're going to talk about, I'm just going to say in general, energy. Energy in general, peak oil more specifically, a little bit about the mineral intensity of some of these solutions that I'll say world leaders want to implement with renewables. That's wind and solar in particular, and electric vehicles. So I watched a clip. I can't remember his name exactly. I know you know it, Justin. Simon
Michaud.
Simon Michaud. He did a really good presentation on basically minerals and energy. And some of the calculations that he did with respect to how intense some of these solutions are in terms of mineral intensity with renewables and other options. And Justin, he reached out to me on Twitter. He said, "Hey, check this out." I checked it out. It falls very much in line with everything that we talk about on the channel. And Justin, what are some of your conclusions that either you've drawn to after seeing that, or have maybe some paradigm shift of thought that you've got after hearing his presentation?
I'm going to try to be as concise as I can with a whole mess of swirling thoughts in my mind. So Simon Michaud, a little bit of background. I just came across him a couple of weeks back. I was on a short road trip. I listened to 5 of his interviews because the first one struck me so hard. And so he's the associate professor of geometallurgy at the Geological Survey of Finland. He's an Australian gentleman living in Finland. His research started when he was posed a question, or he posed a question himself at his firm, basically saying, okay, with all of the gigafactories that they're proposing in the EU, what are the metallurgical needs for those gigafactories? So literally, what are the minerals and the metals that are needed, the processing, the energy inputs, et cetera, to build these? I think it was 50 gigafactories that they were proposing in Europe. That started him down this road. And prior to this, it sounds like this wasn't really top of mind for him. But that led to this very long process, and ultimately a large report that he put out that he highlights in a number of these interviews. And so basically he was shocked, essentially, to put it mildly, that basically for these 50 gigafactories in Europe, we need an unbelievable amount of copper and various other metals that are involved in building these facilities. And he also had so this report that he put out, really, it seemed like it was informed less by concerns about global warming, climate crisis, carbon emissions, et cetera, right? And more on a very sort of practical, in what he believes is a peak oil situation. So according to his research, he believes, and he even states, I could be wrong on this, but he believes that 2018 history will show was the peak year for oil production. He has his own reasoning for that. I think you and I could get into this a little bit deeper, but regardless, oil is a finite resource at whatever cost to get it out of the ground, whatever deposits might be, discovered in the future, et cetera, et cetera. So he's basically concluding oil is going to run out at some point. Society will have to shift away from it. And what would that look like? So he's taking basically this. So the IEA, the International Energy Agency, is pushing for net zero, essentially zero carbon emissions by 2050. And going off of that, Michaud said, okay, what if society were to, based on the population that we're at today and the way that society operates today, the global society, materials shipping all over the world, what would that look like with zero fossil fuels out to 2050? That was the basis for this report. And he said, okay, here are the first assumptions. We double nuclear. We slightly more than double hydroelectricity. We increase substantially geothermal to the extent that we can, and the rest will have to be made up with solar and wind. So he started to get into that, and without sharing the actual data from his report, because I don't have it in front of me, this is more kind of just a a thought exercise with you, I suppose. So I appreciate you going through this with me, because it's something that's definitely top of mind since I've been thinking about this the past few weeks. But basically, long story short, there's not even close to enough metals on the planet to support a transition to a renewable powered society, assuming the population stays as it is and we operate the way that we do. So he makes a number of assumptions with this. Obviously, that's zero fossil fuels. And I think that moving from here until there is probably going to take longer than he thinks it's going to. I think that society could phase out fossil fuels more slowly in an intelligent way without creating massive havoc, possibly. But really, the big takeaway for me is that in order for us as a global society to continue to live in the way that we do, largely without massive disruption, is and also assuming that cheap oil, whether or not we're talking about peak oil, but peak cheap oil. Okay. You just mentioned before we hit record, that society basically needs a 10 to 1 energy return on energy invested to continue. And what does that mean? Well, think about the way all of us live our daily lives. Are we growing our own food? Are we catching water from the roof? Are we recycling our feces? Are we knitting our own clothes from the cotton in our backyard? No, like everything we draw from this energy abundance, all of us do around the planet, right? So that's the basis of that 10 to 1 number to continue to operate how we are. I've heard slightly less. I've heard 7 or 8 to 1, whatever. It's in that ballpark, right?
Yep.
So in order for us to transition away from fossil fuels without causing massive disruptions to the way that we exist currently in society, we have to transition to something that is at least the same or greater EROI as oil and gas. And that's only nuclear. That's literally the only, and I guess hydroelectricity, but that has major limitations with geography and rainfall, right? And also is, in my opinion, hugely ecologically disruptive. Well, without going down that road, it really is. Okay, it doesn't emit carbon. Great. That's a myopic viewpoint. Dams are massively destructive to ecology. Massively. Okay. So nuclear has an EROI of what? 80 to 120, depending on what study you're looking at. Let's just call it 100. Advanced nuclear, SMRs, running off of HALEU, have potentially an EROI as high as 180. So this big picture, sorry to ramble on, and I know I'm not being all that coherent, but big picture is we have to expand nuclear. We absolutely have to. And I'm not just talking my book. I care about society and the world not being hugely disrupted by this moment in time abundance of cheap energy that whether you think peak oil, we've peaked in oil production or not, you at least have to acknowledge this is a finite resource, and the EROI of oil and whatever we transition to matters. And the only way we get around that is either replacing it with a higher EROI energy source, nuclear, or changing the way that we live, or the population declines substantially. I mean, those are basically the options. I mean, how am I wrong here?
Yeah, well, I don't think you're wrong, but I think that also humans are pretty dang smart and pretty they can solve a lot of problems, especially with I think how slow this may progress. I mean, it could be a little bit quicker, but I think there are a lot of solutions that we can have. What I always do is I break the problem down and I say, all right, we've got a problem. What are the givens here in this problem? What's the current state? What are our problems to overcome? And when I look at it, the problems to overcome are we've got a peak in potential cheap energy of fossil fuels with a variety of different fossil fuels. That includes coal and it includes natural gas. I don't think the peak here is in natural gas yet, but it will be. And then oil, I think, is kind of teetering on that edge. So coal and oil, given the energy densities of coal, which is, you've got different grades of coal. The higher density grades are we've kind of high graded it already. So I think that'll decline, and I think oil will. So that is our problem, is that we're going to receive less energy from that. I also think another major obstacle is everything that we want to adopt is energy or is mineral intense. So we look at the minerals in the ground, and all of those minerals have declining ore grades, which are asymptotically approaching zero, which then, if you look at the energy input, goes up dramatically to the upside. So whatever solutions you have, or the way that I kind of view all this is, okay, we've got a problem and we've got low ore grades or declining ore grades with the minerals that we want to use. So the first thing you want to do is you want to minimize the way that I'm viewing this. I'm just speaking out loud. It's not solutions, but I'm just kind of jumping to the solutions, even though you're not supposed to do that. You're supposed to really understand the current state first. The way that I view it is, well, isolate where you need your energy. Don't transmit it. So the first thing you want to do is you want to break up your energy and just plot it wherever you need it. That's number one. Renewables are very good at that, but they're energy dense. Now, when you talk about small modular reactors, now you're onto something with high energy return. So we don't have to build transmission lines all over the place. I think mines will literally have on-site nuclear. As weird as that sounds, they're going to literally plop either nuclear or renewables, depending on how big the mine is and where they need it. So I think they're going to literally start plopping these things right wherever you need them. So I think that will solve the energy intensity of using diesel and other things. But there's other problems that you have to overcome. How do you power these gigantic, front loaders and all these different trucks? You can't do that with batteries. There's no way. There's absolutely zero way, because they run these things in the middle of nowhere. You can't charge these things up. It's
yeah.
And the length to charge them up is going to take forever, I would say. So that's other things that we have to overcome, or problems. But there is hydrogen, and hydrogen obviously requires copious amounts of energy. It's a net energy sink. There's all these drawbacks with it as well. We also have platinum limitations with platinum and how much platinum we can use in the platinum fuel cells. It goes on and on and on. So yeah, I think they're all, what you're seeing is correct. And I think your paradigm, the way that you're seeing it, the world, is all correct. And how I view investments is very similar to how you're viewing it now. And it changes your entire investment outlook and thesis, because now it's like, how do we solve this thing? And it's getting a little bit scary too, the more you think about it, because it is scary.
Yeah.
It is.
Yeah. Yeah. And Michaud's, his conclusions are really interesting as well. And he's taking a very firm stance, basically. Based on an assumption that oil is peaking, or has already peaked in terms of total production, and based on the fact that he's seeing we don't have the metals to do what they're trying to do. Like they just don't exist. His conclusion basically is there's going to be a massive shift in how we live going out into the next few decades. And so, his conclusion is like, well, what do we do about it? He's like, well, learn to grow your own food. Basically reskill is what he's talking about. Like, just learn how to focus locally. And honestly, it's like that, when it really boils down to it, sustainability solutions in my opinion, have everything to do with local action. I think that this panic around climate and carbon on a global scale is just too much for people to internalize and do something about. Like, take a shorter shower and buy a Prius. It's like, well, maybe you can do something in your local community that has a better effect on the local ecology or the local sustainability of that place. And whatever, I'm going down a different road here, but his conclusion is like, yeah, it's not happening. Get ready. I mean, that's really his solution. But I think that he makes a couple of mistakes in his analyzing of why he believes nuclear isn't, quote unquote, the answer. And although I think he does get a couple of things right. So first of all is the very long lead time. He quotes 15 years for a build out. Now, the actual construction of a nuclear reactor doesn't take that long in most places, most of the time, right? It takes that long in the US, doesn't take that long in the UAE with the South Koreans building it, or the Japanese building in Japan. But he's including all the bureaucratic hurdles, the timelines for leading up to construction and including construction, right? So it's just like, it just takes too long. And that's, of course, based on, we got to be here by this date. And I think I think having that kind of hard line is not that helpful. Although being clear about where we need to go is crucial. But saying because we'll never get here by this date, we might as well not even try, I don't think is a very helpful takeaway from that research. The other thing that he's critical about is, and this also is based on existing, Gen 3 nuclear, right? Which is, 450,000 pounds of uranium per gigawatt. And so if we have a massive expansion, let's say we double nuclear, and we need 350 million pounds of uranium per year. And based on global reserves, we've got 13 billion pounds in the ground based on what has been proven out with exploration, right? So he's saying, even if we double nuclear, we can only run that fleet out until the end of the century. And then what? And so, in my opinion, I also think that's a little bit short-sighted, because it's not looking at the advanced nuclear, which is almost twice as efficient as far as EROI, running off of HALEU. And then you also have to consider there's other sources of uranium that can be tapped into at a higher cost. So even at $200 a pound uranium, that starts to make things like phosphate and phosphate tails have a very large resource of uranium. There's billions and billions of pounds of uranium in the ocean. It just takes certain technologies and certain costs to actually extract it. But uranium at a much, much higher price still is a way higher EROI than solar and wind, that we literally don't have the mineral wealth on the planet to support. Now we need everything. It's like an everything. It's a yes and situation, right? We need to be able to utilize the fossil fuels that we have as long as we can for what is most efficient. So I think, driving around Hummers is probably not the greatest idea, but we might want to utilize fossil fuel transportation, maybe with hybrid technology rather than full electric. And I think we also need to bring in a conversation about efficiency. The focus is so much on carbon that we're trying to electrify everything without taking into account that electricity is not always the most efficient way to do things. Like heating with electricity is extremely inefficient. And so I think that we need to just bring efficiencies back into the conversation. And sure, certain high energy costs automatically lead society down a path of finding new efficiencies in the way that we do things. But to wrap that all up, I think that he's done important work to highlight that we actually have limitations, physical limitations, when it comes to copper and nickel and cobalt and lithium and iron. I mean, just even the most abundant metals on the planet, they also are limited, and we cannot run a modern society on renewables, even if we had those minerals, because of their intermittencies. And so you see these comparisons, these EROI comparisons, solar versus everything else. And it's like, oh, well, look, wind has, an EROI of 15, and that's pretty good. That's better than, the Canadian oil sands, as you just pointed out before we hit record. But when you have storage as part of that equation, it chops it down by more than that. It chops it down from 15 to like 4 or 5 in an EROI standpoint, when you're considering batteries or whatever other way that they might store energy. Mm-hmm. So nuclear is the answer. And I think, one more point, sorry to go on. Michaud makes a very astute observation that we have a limited fuel cycle, and it will take massive amount of capital and labor force, skilled labor force, to expand the fuel cycle sufficiently to expand nuclear fast enough to help with this problem. And he's right. I mean, it will take a lot of capital and a lot of skilled labor in order to vastly expand things in order to get there. And to back myself up in my own takeaway, the International Energy Agency, the IEA, puts out an annual report called the World Energy Outlook. And in this year's report, they increased their forecast, or their proposition for nuclear by 2040 by 11% over last year's proposition. So they're now wanting to expand nuclear to, I believe it was 5,400 terawatt hours, which is about 115% increase from where we are now. And that's by 2040. That's 13 years away, or 17 years away, right? that's the biggest expansion of nuclear that the world has ever seen if we can accomplish that. And this is what they are suggesting to get to their net zero goals. And they're, of course, operating not on peak oil, but they're operating on global warming is going to kill everybody. Let's, get away from carbon ASAP. And I'm not in that camp, but the fact that they're also pushing for this in line with somebody who is in let's say a peak oil camp, or we need to transition towards a new energy paradigm, while actually considering math and the physical limitations of the physical world. And so those two things are aligned. I think that's really exciting for nuclear.
Yeah, I agree. I just look at, like, I can see the vision and the strategy and all that, but the tactical thing is where I get like caught up sometimes. Because if you're in an energy crisis, let's say, and things are ultra expensive and difficult to move and do everything, how do you have a world's largest mining boom? It doesn't make sense to me. So what I think is going to happen, or what I would try to do is, I would get the efficiency. I would try to reduce what we're using and why we're using it. So if oil's a problem, well, don't use it for transportation. Use it for paints and chemicals and whatever else, which oil's in everything. And get it off the transportation side as soon as possible. But you can't do that with electric vehicles, because electric vehicles consumes all these minerals that we don't have. So, like, from a tactical approach, like how do you solve this problem and what does it look like? I come up with nothing. It's like fast track nuclear as fast as we can. And the way that I would do it is I would create small modular reactors, throw it through a facility with one design that we could maximize the efficiency of your labor of building things, get the design set straight, get it good, and just fling them through the factory, and then stack them up together if you need more, or put them in locations where you don't have to run power lines all over the place, and put those right where you need them. I don't think there's any other solution that I can really think of where it maximizes your energy returns, simultaneously minimizing your mineral requirements, and then minimizing the amount of labor needed, maximizing your the design. You just use one design and fling it through. I mean, that's all I can come up with. So, I look at other solutions. I'm like, I don't know how that's going to work. I mean, think of like Europe right now, who is constrained with energy. If that's like 4 or 5 years out for the entire world, how are you going to go and tell everyone, guys, you need to stop doing whatever you're doing, and we're just going to go mine. We're going to mine all this stuff nonstop, and then we're going to put all these wind turbines and solar that doesn't reliably get you power. It's like, why would I waste my efforts and time on that? Like, the best thing you could do is never do it at all and just go straight to nuclear, because in order for wind, the way that we buffer the system is we put wind and solar up. We run a ton of power lines, massive, like these things are like copper lines that look like this, to each of these turbines. And then we run all these lines all the way to a hub. And that hub is where we have a natural gas station. And then they convert it from DC to AC and then send it out through the grid. The natural gas power station is what basically transitions from, solar and whatever not working or running, and then they turn the natural gas plant on. But the problem is you have to build the natural gas plant, and you have to build all these wires and all these things to these very scarce energy gathering systems. And you've got copper and all these minerals running all over the place. So the thing that I see as a constraint is, if we get into an energy crisis and the copper's not there, all of this is cut off. You can't do wind and solar. So what he's describing is impossible, because the mineral intensity of all these things and how you interconnect everything can't exist. So when I came into this, and I was looking at my investments in 2020 from a peak oil perspective, I was looking at it like the minerals aren't going to be there. Like even the majority of these companies that produce items, they're going to get stuck. So you're going to have, you're going to have one part or three parts or four parts that are short to build this complex system. You can't build a complex system because of those three or four parts. From an investor's perspective, the most valuable components are those things that you're going to be short the most in the build. Those are the most valuable ones. Everything else will pile up and it'll be an excess, so to speak. So from an investment standpoint, it's really hard to think of an investment thesis to say that copper is necessarily going to be the limiting factor. It could be something else. I don't know. Like if we may have a surplus of copper, but we have a huge shortage of aluminum because we don't have the energy to run through smelters and all these other things. And that's what makes the investing like so hard. So I think the root of the problem is energy. So I just went straight to energy. It's like bypass everything else. But here's the other problem. Our system, and I've talked about this before, our system is dependent on credit expansion and growth. And if you don't have the energy to do it, then your currencies will start to fail. So I don't know how even that portion can bridge you to the future if your currencies are all, eating it. And it's like, oh, I'm going to go get a loan to build a small modular reactor nuclear plant. Well, not if your currencies are all having problems. And we're seeing stresses in the system, in the bond market over in the UK and whatnot. And maybe it's solvable in the short term. I don't know. I don't have the answer saying that this is just all going to collapse in 2 seconds.
Right.
That don't take it from that. I'm just saying there's going to be pressures in the system that build because the GDP side won't exist in relationship to the debt that's already out there, and it has to expand and grow. So I think currencies come under pressure as well. So my thing's always energy related, currency related. Those are the two things. And I know a lot of people, they talk about Bitcoin, Ethereum. These things are energy hogs. And I'm like, there's no way they can survive that. Not in an energy crisis world. I would think maybe they can. I don't know.
Well, I think that to follow up on the first part of what you just stated, I think SMRs are such an unbelievably vital, important, exciting possible solution for everything that we're discussing here. I think that if smaller, cheaper nuclear reactors can be built in fleet mode, that really goes a long way towards helping the situation. And it's from what I can tell. So I mean, a lot of what we're talking about is math and also hypotheticals, but coming from more of an investing standpoint, we can also look at what is happening. And even if we take, I mean, Germany is one example, right? I mean, closing down their last 3 reactors in April of next year, supposedly. I mean, these are beautiful, beautiful pieces of engineering. I mean, you can eat off the floor. They're clean. They're efficient. It's truly heartbreaking to see them doing this, but they are doing it. But where are so many other countries going? They're going all out into renewables, and a lot of them are going all out into nuclear as well. And so even if we take the United States, we're not really talking about peak oil. We're talking about climate emergency. But regardless of the reasoning for doing it, they're doing it. Like the funding is going towards expanding solar and wind, as well as expanding nuclear, supporting existing nuclear, and supporting a full fuel cycle supply chain in the United States. So right now there's I believe there's 3 demonstration projects that are kind of on the table. NuScale's Voyager, which is a light water reactor, which is already NRC approved. So they could be a first mover for that reason. But then you also have X Energy's XE100, and the facility to manufacture the fuel for these SMRs is currently being constructed in Tennessee. That's happening for X Energy's 100 megawatt SMR. And then I think, what is the other one? BWRX 300. I think that's a GE Hitachi SMR that also runs on HALEU. So the government is actually supposedly going to supply the initial core loads of HALEU, because we don't yet have the HALEU fuel cycle happening. But I think that it will. So from an investment standpoint, I totally agree. Just thinking about energy. So thinking about energy, if you do believe that oil is a finite resource and production is going to decline and get more expensive, that's probably a place to park some money out over the next decade or 2 or beyond, right? Like the case for higher prices of oil is very strong. Then looking at to what is actually happening with expansion of solar and wind, it's like it's going to take, even if we don't have the mineral endowment to do what Michaud is suggesting, which is zero fossil fuels by 2050. I think his report showed that we have, what was it, 16% of the copper needed in order to actually make that happen. But there's probably enough copper to vastly expand it in a lot of modern societies, which appears what we are doing. That probably means much higher copper prices. And then you have to also look at storage. Like, what are the current storage means for energy from intermittent renewables? I think that there's, when you have geology present to support it, you can do, I forget what it's officially called, but they pump water uphill during the day and, let gravity spin a turbine during the night. I think that's a cool way to do it. But battery storage, we're looking at vanadium flow batteries. We're looking at lithium ion batteries. They're looking at different salt batteries, these metal, what are they called? Metal, like different metals interacting literally with the air as a means to store energy. There's some cool technologies, but all of these things require resources and require metals. And so that's where this is going. And whether it's being driven by fear of oil peaking or it's being driven by panic about climate, it is happening. That's where the wind is blowing. And I think that this is a theme. And I think that this struck me so much because I get really caught up in thinking about the short to midterm, because that's what all the retail investors want, right? So, I run the newsletter and people ask questions, Justin, when do you think, what's going on with seasonality? It's like, well, we're caught in this crazy market year where we've seen $50 trillion destroyed this year in wealth. You have to put things into context, but beyond what's going to happen in the next 6 to 8 weeks, I'm always thinking about, okay, financial flows coming into spot and ramping up the spot price, the long-term contracting cycle kicking off. What is that going to look like for 2023, 2024, 2025? Short answer, it looks fantastic for the next 2-3 years. Absolutely. And my money is where my mouth is there. But now thinking about all of this, I'm just like, this could be an absolute super cycle for uranium and nuclear that could be multiple decades in the making. That is certainly a possibility. Of course, we have, as all commodities do, cyclical spikes and troughs, et cetera. I wouldn't expect a straight line up for the next 30 years. But this theme has completely changed since I started looking at it in 2016, 2017. Went from a hated sector, the commodity is $18 a pound, it's got to go to 50 or 60. All right, I'll bet on it. Let's dig into this a little bit more. And now it's like, this is potentially the solution for the problems facing humanity. And it's totally come full circle. It's pretty brilliant.
Yeah, I agree. It's so I always had this large paradigm perspective. And I think where people get caught up if they're investing is they take too short of a time frame as an investor, and you have to back out and take a longer time frame. If you take the longer time frame, the big picture, the big vision, so to speak, and you look at it with that type of, I call it the paradigm, that outlook or view, you don't worry about the short term as much. You don't even worry about earnings. If there's companies that miss earnings, they go down 20% or something like that. I just ride through it. It's like, so what? It's one quarter. Next. That's my viewpoint though. Other people, they get tied up with if they're down, if they're up, why is this down? What's the reasoning? You guys, like the short term, it could be a billion different things and nobody knows that answer. I can tell you, no one knows the answer to the short-term movements. They'll come online, on TV. I mean, obviously if it's something major, but if it's something like, why is this one company down 5% one day? It's like, guys, don't worry about that. You're focusing efforts on something that just doesn't matter, in my opinion. What you want to do is take the big picture view, take a big outlook, and then I developed strategies like, how do I invest based off of this outlook? And that's why I keep looking from a tactical approach. It's strategy and tactical put together. The strategy is, if we're going to go this route, how are we going to get there? And if you get all these roadblocks, it's like, we can't go that route. We got to go a different route. And then the route that I think is the least likely or the most likely to happen is the route that I like to put my money. It's like, I think this will eventually materialize 10 years from now. And then I put my money there and let it sit. But I don't think a lot of investors, I don't think they think strategically like that from a long, big picture view. They want the short term, I need gains today. And I don't know if that, I don't know. That's not the approach that I take when I look at it. So when I look at it, you know, the small modular reactors is good, but I also look at it like, what is the deposit quality? Like, I think that's just massive that people overlook. So they think like, you know, and then you look at the time frames too. So I think that there's a huge problem with a lot of these investments where not the problem with the investment, but the problem with solving the problem. And that is, we have all these things out there in the world, but they all take a long period of time. And I don't know if the timing of when this stuff is needed can be brought online as quickly as we would like. And then that required, I mean, that puts us into a situation where we could have gigantic squeezes in certain commodities at certain times, where things just go like parabolic for a little bit, and then they'll crash back down, but it'll be at a higher high. So I think that can happen in natural gas. I think it can happen in oil, in uranium. And it's like, how do you solve this? Like, I mean, yeah, we can extract uranium from the sea or something, but how long is that going to take? Like forever? 20 years, 15 years, 30 years? Like it takes a long time. What happens between now and 5 years when we try building all this and there's a shortage? Everyone's going to look at it like, boom, price will spike and it goes to wherever. I don't know where it goes. But I mean, that's kind of what I'm viewing all this. It's how hard is it to implement and what's the time frames? And the time frames and how hard it is to implement is what gets me. Because I think there's going to be a spot where we just squeeze like no other that we've never seen before. And I'm not for this. I'm not against it. I just think it will happen. And I think people are going to say, we need to build all these nuclear reactors. They ramp up like heck. We start building the heck out of it. It's like, hey, how do we mine this stuff? And it's just not there. Here's something cool, Justin. If you look at the history, both of those bull markets in uranium had massive quantities of inventory of uranium, both of them. And they were, in my opinion, they were driven more financially and energy driven, where we have an energy constraint in oil in the 1970s, and people said, oh, nuclear is going to be a solution. And I think money kind of migrated in those certain directions. Although we had massive amounts of production and inventories in the 1970s. Now, this is like the real deal shortage. This isn't like, hey, we've got a bunch of inventory. It's just financially driven. And that's where I'm like, I don't know where this is going. Like I'm like, this is going not to, I don't think 200's even like, I know I throw out these numbers like it's nothing, but like, tell me how 200 is going to solve the problem.
Well,
I
I
mean,
guess it depends on how quickly we would get there and how long it would stay there. So if it's a speculative spike that's driven by financial players, that's probably not going to stay that long, and it's not going to solve anything.
What about a supply-driven problem where we actually run into supply constraints?
So that has the potential even out towards the end of the decade, because really what we're talking about now, and a lot of this is exacerbated by a bifurcated market where, you know, you still have plenty of enriched uranium or plenty of UF6 coming from underfeeding in Russia, but that's not going to be going towards the West, which has 70% of the world's fleet. But so if let's just say next month we're at $100 uranium. I'm not expecting that, by the way, but let's just say we're there and it stays there for a period of 12 months. Then we can see pretty much all of the proposed projects in the money, let's say, all in, assuming they can raise the capital needed. That's, you know, Bannerman's Etango and Deep Yellow can get into development, and all this stuff in the US can get into development. Some of the stuff in Saskatchewan that's further along can get into development. Then it takes 5 years, you know, 3 to 5 years to actually, like, even let's just say NextGen's Arrow, right? Unbelievable deposit, 30 million pounds of uranium per year. I can't remember how many years it runs, like 8 years or something like that. Unbelievably huge, very high grades. Let's just say they can raise $1.5 billion and start building that project tomorrow. That thing's not going to be producing until 2027. right?
So
So the a spiking price doesn't solve the shortage. We have MacArthur finally online. Lanker Heinrich will be online 2024. There US, a couple projects there, Global Atomics DOS at 2025. So we get to this point around 2025, 2026, where a snapshot of the market is close to being balanced in terms of structural demand that year and structural supply that year. And it's like it touches that balance point, and then we do this again. And going out into the end of the decade, it's true. I don't know where it's going to come from. There's ISR projects with Orano in Mongolia that they're talking about production in 2030. That's needed. I mean, all these potential projects that are not expected to come online 2026, 2027, 2028, they are going to need to be online. So we're going to have a higher cost of uranium that's sustained in the capital markets that can support development for all of these projects in order for the early 2030s to have sufficient material to actually power a larger nuclear fleet. So if nuclear is, quote unquote, the answer, which I believe it is, and if we go in that direction in terms of global development of nuclear, which I don't know if that's going to happen, it's looking like it could. Mm-hmm. China certainly is following up on their plans. They've got 5 construction starts this year, with 1 reactor connected to the grid so far this year. I believe there's another one coming. Looking at 6 to 8 reactor starts or construction starts per year and going from now towards the end of the decade. And so far, they're following through on those numbers. And they're still out in the market looking for uranium. Right. So, and China, and they have the biggest inventory on the planet. They've got 300 to 400 million pounds of U3O8 equivalent. That's a massive inventory, but that's only a massive inventory if they stop their build out right now. Then they're sitting on, maybe a decade of fuel. But if they keep building, they're going to keep buying uranium. So let me wrap this up into something that you can actually kind of sink your teeth into. I think that you're right. Higher prices have to be significantly high and sustained in order to provide incentive for basically every proposed project to get into development by, let's say, the end of the decade and into the early 2030s.
Can I bring up a counter argument?
Please.
Of why that may not happen to a lot of the stuff that you said. So here's my counter argument. Right now, drilling oil, they are short. This is all the infrastructure in place. Everything's all right there. And they can't drill oil right now in some of these things because they're missing the pipe. The pipe, one thing is delaying something that's already all established. Now, imagine trying to build all of these mining sites when you've got shortages across everything. I can't build product right now in aerospace because we have shortages. We have shortages of everything all over the place. To build a mine, it's going to be near impossible. So with, one, they need trucks, they need diesel, they need energy, they need all these different things. They need smelters working. They need manufacturing plants to be running full tilt. They don't have the labor to hire, some of this stuff for all these mines. I'm looking out there like, you think they're really going to build that mine? And I guarantee you the mines cost to mine that could be $400 or $500 a pound with inflation, with the shortages, so the aspect of how to play it from an investment perspective, I'm getting real confused on, because it's like, okay, let's say you've got the deposit, it's sitting there. How do you mine it? Because if we're struggling today to get all the things needed for stuff that's already got infrastructure in place, imagine trying to put the infrastructure in place from like nothing. Like I'm like confused.
So I watched a webinar this morning from UXC. And it was really interesting because a couple of times during the webinar, I kind of flinched for a second and was like, oh, this is being presented to utilities. This is not a long bull case for the investment side of things, because their primary clientele is nuclear utilities. UXC, for anyone who's watching doesn't know, they're sort of the prominent, along with Trade Tech, UXC and Trade Tech are the prominent nuclear fuel consultants. They put out research reports. UXC puts out a very in-depth quarterly report, and then they do weekly reports. And the utilities read this material on what's going on in the world with nuclear. They report on pricing across the fuel cycle, et cetera, et cetera. They did a webinar this morning for their clients, and we subscribe to their weekly publication. And so the webinar, I thought of this because, to your point, they basically said, yes, there are a number of projects in the pipeline for development, but uranium mines never come online in timeframes that are expected. They just don't, period. They never have, they never will. And again, you know, talking about what needs to happen a minute ago, I'm not saying I'm expecting that's what's going to happen. And these supply chain challenges are definitely going to slow down expected production. And I think that the utilities will become aware of that. I don't see how we don't go to much, much higher pricing. Now, the price forecasting is interesting because you can say, okay, well, every project on the planet, well, maybe not every project, you know, there's some real dusters in, you know, in the States and some stuff in Namibia that's extremely low grades that needed $75 a pound 3 years ago. But let's say $120 a pound, whatever. All of these development projects, in theory, if they have jurisdictional support, sufficient capital, sufficient workforce, and supply chains to support the needed infrastructure to build them, could come online with that pricing. So that's why you kind of go, okay, well, we're probably going to $100 a pound because that's what we need in order to get the marginal costs of production projects into development to support the demand that is coming, right? True. That statement is true. So that's a conservative bet on the price, but that doesn't take into account these supply chain problems. If all of a sudden an expected mine is supposed to come online in 2025 and they say, oh, just kidding, it'll be 2027, you know, that has an effect on price because it has an effect on utilities behavior. You know, that was pretty much one of the big catalysts for the previous bull market. In an oversupplied market, to your point, there were sufficient inventories. We had massive secondary supply, not only coming from enrichment underfeeding, but coming from megatons and megawatts. The flood at Cigar Lake. This was a mine that was in development that hadn't been producing yet. And the mine flooded during that development process. And that kicked the price up because utilities panicked and started buying like crazy, even though there was still sufficient uranium in the world at that time. So yeah, it's, you know, there's a development company in the United States. I won't mention who they are, but they're a first mover in some of their ISR projects. And same problem as the oil and gas companies. They could not find the pipe. So they had to go to Mexico directly to a producer of PVC and buy an entire lot of production. You know, dropped $100K on PVC pipe so that they can guarantee that they would have it for their ISR wells. And that was something that they were able to pull off because they were a first mover. I am hearing that, generally speaking, supply chains are getting slightly better than they were a year ago. So that's good. But expected production isn't going to come online in expected timeframes. It's just not. And the prices are going way, way higher because of that.
Yeah, what I see is like the diesel inventory is really starting to come down. I'm like, well, how do you move product? It's there's so many moving factors here that I kind of lump it all together and just say, hey, look, we're gonna have problems. Like I don't know where it is, I don't know what it is, but I just think it's going to slow things down dramatically.
Yeah,
I've seen that with the production of stuff that I do in aerospace. So I think it's going to extend.
For sure.
And I think these $75 a pound estimates, they're probably off by 2 or 3x. That's my guess in the future, because they're gonna say that was under this paradigm when everything was available, it was all cheap, and in a disinflationary environment. Now that your capex, your interest rates are going through the roof, I have to finance this with a completely different interest rate. And then you start like looking at all these other things. It's like, man, this is not even close to what we thought. That's my guess. I don't know.
Totally. Yeah. So, yeah. I think the next move higher that we're going to see for uranium that comes well, I mean, it could come at any time, and it's likely to at least be partially fueled by financial interests, let's say over the next few years, is probably in that ballpark. But when you take that zoomed out view, if we are talking about potentially seeing a much larger expansion of nuclear, a la the IEA's World Energy Outlook, they want to get to 5,400 terawatt hours by 2040. We're going to have that higher price of uranium, to get it from other sources, and to bring every marginal project online in traditional mining, potentially even get it from phosphate tails, and maybe eventually from seawater. I mean, it's going to have to happen if that's the way that the world goes. And I'm not saying that we're going to do that, but I am saying that we should. And I think that is part of what is a best outcome, is a everything and all of the above, but nuclear is the only thing we have that's clean and that's has a higher EROI than oil. I mean, and oil and gas. And that's in order to replace a lot of the fossil fuel demand that's needed for the world. We've got to increase that EROI, not drop it down.
Yep. I agree. Totally.
So yeah, price targets, I don't have them because it's so, at least in the short to midterm, it's so dictated by financial flows, and that's impossible to predict. You know, I mean, when SPUT took off last year, it was like, oh my God. I mean, if the flows keep coming, they're going to keep buying. This could ramp right now. And there's no way to predict that those flows would pull back, but they did, and they have. And so, and same thing, you know, UXC highlighted that this morning. And, you know, even with SPUT out of the market, didn't fall below $47 a pound. So that's probably the bottom. I mean, this is a very conservative price reporter saying these sort of things. So if those flows come back in, and I think they will, because I think history shows that when financial interests feel that they have something cornered, they go for the jugular. And I think it's only a matter of time before they do. So that price could go far beyond what is needed for these marginal projects.
Well, yeah, speaking of money flow, though, where is the money going to flow if you have shortages of minerals? So like if you can't build products, it's not going to tech. Money's is going to leave tech. It's going to leave bonds eventually. I'm talking like big picture view. Because people are going to question, they're going to say, well, if we don't have the energy in the future, how is this sustaining? If we don't have the minerals in the future, why would I be stuck in a company that's just eating through minerals and selling it to an end user? So the way that I view it is, what investments are going to work under those market conditions in the future in an energy short environment where bonds aren't working, stocks aren't working, you know, and you go on and on and on. It's like all the money is going to have to flow to certain areas. And I think energy is one of the areas that it will work, and same with precious metals and those types of things.
Oh yeah.
So that's my viewpoint.
Yeah. To quote Adam Rosenzweig, you know, commodity bull markets don't tend to peak at 4% of the S&P, with energy at 4% of the S&P. Right. You know, it's more like 15 to 20. So I think we have a long ways to go in this energy cycle. And also to quote, you know, our friend John Polomy, stay long energy. I mean, it's like, how do you play this? Stay long energy. You know, maybe a diversified basket of metals, you know, battery metals ETF, whatever it might be, if you don't want to do the work. Long uranium, long oil and gas, long precious metals. I mean, that's where I'm at right now.
You saw, that's my portfolio. You just described my entire portfolio. Right there. That's it. I mean, obviously I've got you might be overweight more sector, you know, a certain sector than I am.
Sure.
But
yeah, I'm overweight uranium because that's what I know best, but I have a decent amount of oil and gas and decent precious metals, but it's majority uranium.
Yeah, I'm heavier weight physical metals and oil and gas. And then I have a smaller weighting to uranium. Not that small, but enough that'll make a difference. And then I've got, you know, like rare earths and other metals as well.
Nice.
So
yeah. Well, we'll have to revisit this topic. I think I feel like I'm in the early stages of fleshing out a more concise narrative with all this stuff, but I appreciate being able to bounce ideas back and forth.
Yep. No problem. And thanks for coming on. I really appreciate it. So
anytime.
All right, guys, that's all I've got for today. We'll catch you next time. This is Justin and Finding Value.